Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this session I'm going to show you a very simple setup, which is a counter trend trade, very high probability with a retest pattern following a short-term exhaustion. We are pattern traders. We start with a compelling pattern, no setup, no trade. Then we overlay our other concepts, which include such things as where is this setup in connection with the overall trend, support and resistance. Is it showing relative strength? What are the broader markets doing? Multiple time frame alignment. And then you simply enter and manage in between. So all 9 of these, we have many more, including what I'm about to show you, which are the starting point of these are bullish setups on anything you trade, any time frame. The opposite setup works identically the same on short setups. I'm going to show you what's called a 2T reversal following a climactic buy setup. Now this is a XLU, it's utilities ETF. This is what we call a climactic buy setup. We have many fluid bars down, lower lows, lower highs, relatively equal opens and closes. And we're looking for a short-term capitulation. They get far from the 20-period moving average, and we're looking like Inspector Clouseau right here, of when this rubber band of being too extended is ready to snap back for a counter trend trade as a high probability swing trade on a daily chart. Now, all of our daily charts are this simple, red and green color coded candlesticks, volume, and we have the 20, 50, 200 period moving average that helps speed the analysis, if you will. Turns, as we call them, occur in different flavors and have different levels of confidence of the turn being sustained and ready to bounce. Now, you could trade a climactic buy setup as a V bottom, which is just a 1 or 2 bar turn. The more bars that you have, however, the better, because we have more information that it's not going down anymore, that supply is exhausted, and that demand is going to exceed supply to go into the void. All of our setups have this concept called the void, which means for longs, look to the left. There's insignificant resistance because of this fluid move down for it to move back up. So let's now take a look at this bar by bar. We have 1 bar of stabilization on increased volume. That's a plus. You have our attention. But it's not what we call a potent reversal. So we watch it day by day by day. So we have 2 more bars of stabilization. Still not potent. It's just slowing momentum, possibly building a short-term bottom. Now, this is what I call a gotcha bar. We gotcha. It made a new low and then had a range expansion bar that closed above the high of these 3 bars. That's our what we call a 2T in this particular case of our 4-bar reversal, because I have 2 bottoming tails and the new low is a plus. This is a closed trade. All of our open and closed trades we give to subscribers in the members area. We give the date, the symbol or ETF. If we're trading stocks or options, the technical setup. So a wide range bar retest reversal of a climactic buy setup. There you go. That's the 2T reversal right there. We sold some into strength, went into trail mode, had a beautiful gain here for a 4-day swing trade. Now I'm going to show you a very similar pattern. Same sector, utility sector, AWK, but we did what we call an income trade, which is selling out of the money, either naked puts or put spread, where we look to just keep the money, calling a short-term bottom. So same kind of concept, bunch of fluid bars down. I have 2 bars, 3, 4, didn't make a new low, but our entry is over the high of this bar, particularly when the sector was bouncing. That's one of our concepts, is what is the issue doing relative to the sector. So the sector going up, XLU, is going to provide some tailwinds to this moving up. In this case, in our weekly options trader, we sell a put option under support. So in this case, we sold a $115 put, we bought a lower put, the 110. We took some of the money to buy that further out of the money put. We take in 50 cents a share. And so let's say you did a 10 lot. $500 would hit your account. It's yours to keep. In exchange for that, you have an obligation to buy the underlying at $115 on or before 10/20 expiration if the put buyer wants you to buy it. But the put buyer's not going to want you to buy it as long as it's trading above the short strike. And the spread reduces the buying power required at the brokerage firm, and in the event of a catastrophic gap, it limits the maximum loss. So we just managed in between, had a nice little 3-day swing trade on an income trade. If you'd like to learn and get trades like this, go to mastertrader.com/advisory swing. We give stock option. My partner Greg Capra gives incredible detailed market review with a video using our Master Trader Techno Fundamental approach. And every trade comes with the education, the tracking from beginning to end. Take a no-brainer trial. You'll love it. As always, any questions, email Greg or me. Look forward to seeing you in the next trade review video. Good trading all.